What if I told you that the promise of eternity behind diamonds is crumbling before our very eyes? In just a few years, the prices of lab-grown diamonds have fallen by more than 70%, according to data from the specialized firm Rappaport in 2024. This is one of the most dramatic declines ever recorded in the luxury market, revealing not only an economic shock, but also a profound cultural shift. What was once sold as a symbol of status and eternal love is now rejected by jewelers who will not even accept these stones as trade-ins. The slogan "Diamonds are forever" may have withstood wars and crises, but can it withstand the changing behavior of Chinese consumers? Welcome to Tellnomics, your channel to understand how invisible movements in global economics and geopolitics are rewriting the rules that shape our future. Here, every data point is a key, every statistic a story, and every cultural change a sign of what might happen tomorrow. And the story you are about to follow is not only about sparkling stones, but about how a single consumer market can destabilize an entire global industry. In the last 5 years, diamond sales in China have tripled, reaching more than $22 billion, according to the Global Diamond Report published by Bain & Company in 2023. The enthusiasm seemed unstoppable, driven by a younger generation that saw lab-grown diamonds as a more affordable and ethical alternative. But this fever hit a risk. What if demand stopped growing? What if supply, rising every year, surpassed consumer desire? Now imagine the impact of a market flooded with diamonds that once sold for thousands of dollars, but today are worth only a fraction of that price. This is the dilemma that shook not only major jewelers, but also mining companies, investors, and even ordinary consumers who believed they were buying something lasting. The collapse of lab-grown diamonds is not just about economics, it is also about culture, generations, and the redefinition of what value really means. And the burning question remains, if diamonds have lost the shine of eternity, what can still sustain this industry in free fall? The answer begins in the heart of a silent revolution, where the synthetic became indistinguishable from the natural, and where the promise of forever lasted only a few years. But what exactly are lab-grown diamonds, and why did they once seem like the perfect solution before becoming the epicenter of a global crisis? Lab-grown diamonds emerged as a technological and moral revolution at the heart of the luxury industry. Unlike diamonds mined from the earth, they are produced through two main processes: high-pressure, high-temperature, HPHT, and chemical vapor deposition, CVD. The result is impressive: stones that, to the naked eye, are identical to natural diamonds, but that cost only a fraction of the price. For perspective, in 2022, a natural 1-carat diamond sold for about $1,000, while a similar lab-grown stone could be purchased for less than $100, according to the independent consultancy Diamond Foundry. This brutal price gap, combined with a narrative of lower environmental impact and freedom from so-called blood diamonds, seemed unbeatable for the modern consumer. And it was not only about price or ethics. Major international brands jumped on this wave. In 2018, jewelry giant Pandora announced it would sell only lab-grown diamonds, according to Reuters. De Beers itself, the absolute leader of the natural diamond market for decades, launched its Lightbox line of synthetic stones at competitive prices. This move showed that even the giants believed the future was in the lab, not the mines. But did the industry really understand the game it was about to play? Picture the scene. You decide to buy an engagement ring. Traditionally, it represented not only love, but also status, something to carry for a lifetime. But when you discover you can buy the same visually perfect stone for less than 1/10 of the price, what do you choose? This was the dilemma millions of young people, especially millennials and Gen Z, began to face. And that was exactly when the market turned upside down. Suddenly, luxury became accessible, but also too fragile to sustain billion-dollar margins. By 2023, lab-grown diamonds accounted for nearly 10% of all global diamond jewelry sales, according to Bain & Company's Global Diamond Report. The world seemed convinced a new era had begun, yet at the peak of success, something began to go wrong. Production skyrocketed, the market became saturated, and the narrative of limitless growth began to crack. And here lies the crucial question. Can a product that won consumers through affordability and ethics survive when its very abundance destroys its value? What happens when the promise of accessible luxury collides with the reality of global overproduction? If you want to understand how this crisis formed and what lessons it may hold for the future of the global economy, subscribe now to Tellnomics and leave a like on this video. Each week, we uncover the stories shaping the world we live in. The story takes a different turn when we look at China. It was there that the promise of lab-grown diamonds turned into excess. In a short time, China became the world's largest producer, responsible for nearly half of global supply, according to consultant Paul Zimnisky in 2024. In the province of Henan alone, factories are estimated to produce more than 1 million carats per year. And it is not only big industrial conglomerates. Diamond-making machines started selling on platforms like Alibaba for about $200,000, allowing new producers to join the game. What looked like innovation turned into a problem: a flood of stones on the market. India, which has historically dominated diamond cutting, kept pace. Its cutting centers ramped up production to serve both Chinese buyers and U.S. consumers. Suddenly, there were too many diamonds for too few hands willing to buy them. Global polished inventory surpassed $20 billion in 2023, the highest level in 5 years, according to the Rappaport Diamond Report. What does this mean? Storefronts were full, vaults were overflowing, and yet consumers no longer showed the same appetite. Now stop and reflect. What happens when the promise of exclusivity, which has always sustained the diamond market, disappears in the face of abundance? How can a symbol of luxury remain valuable if it is mass-produced and sold like any other consumer good? China's excess not only crushed prices, but also corroded the very narrative that sustained the magic of these stones. The clash between supply and demand creates a fascinating micro-conflict. On one side, factories churning out carats as if they were grains of rice. On the other, consumers increasingly cautious and skeptical about the value of investing in diamonds. This imbalance not only drove prices down, but also opened a larger debate about what value really means in an age of technological abundance. And in this scenario of overproduction, the next inevitable question arises: how low can prices fall? And what happens to an entire industry when luxury ceases to be rare? Imagine waking up in 2024, walking into a luxury jewelry store, and realizing that showcases full of diamonds no longer spark desire. What was once a symbol of exclusivity and wealth was now a devalued product, losing worth by the day. Prices of lab-grown diamonds collapsed in an unprecedented crash. According to the Rappaport Diamond Report, between 2022 and 2024, the average value of rough lab-grown diamonds fell by about 85%. A 1-carat stone that once sold for over $3,000 dropped to under $900. Wholesale prices fell even harder, from more than $300 per carat to just $80. The glamour was crumbling. This collapse hit not only consumers seeking affordable rings, it struck the entire chain: traditional miners, synthetic diamond manufacturers, jewelers, and even investors who thought they were buying a durable asset. The crash exposed an uncomfortable truth: lab-grown diamonds, once priced at 90% of natural stones, now sell for only 10 to 15% of a mined gem's value. In other words, what once looked like luxury became, within months, a clearance commodity. But this crisis was not only financial. For some industry executives, the situation was described as a bloodbath. De Beers, for example, was forced to cut prices and reduce production by 20%, according to Bloomberg. Independent producers went bankrupt, and thousands of workers in India's traditional cutting hubs lost their jobs as orders evaporated. The social impact of this crisis was as profound as the economic one. And here arises the inevitable question: if lab-grown diamonds were sold as the perfect alternative, cheaper, ethical, sustainable, how could they plunge into such a dramatic collapse? The answer lies not only in abundant supply, but also in demand that disappeared almost overnight. And this void was driven by a deeper cultural and demographic shift. What made young Chinese consumers, once passionate about diamonds, abandon this centuries-old symbol of status and love? For decades, China was seen as the growth engine of the diamond industry. Between 2018 and 2023, sales tripled, surpassing $22 billion, according to Bain & Company's Global Diamond Report. It was the perfect market: a rising middle class, young consumers fascinated by status symbols, and a cultural desire to associate marriage with the eternal sparkle of a precious stone. But in 2021, this crystal castle began to crack. The number of marriages plummeted. In 2013, about 13 million couples married in China, according to the Ministry of Civil Affairs. By 2022, that number had dropped to only 6,800,000, almost half. Fewer marriages meant fewer engagement rings. And if diamonds were always fueled by tradition, once tradition dissolves, the market collapses. The economic context worsened the blow. Youth unemployment surpassed 20% in 2023, according to China's National Bureau of Statistics. At the same time, the real estate crisis wiped out trillions in household wealth, crushing consumer confidence to historic lows. In a country where property had long been the main pillar of financial security, this psychological collapse was devastating. How could young people justify spending thousands of dollars on a jewel when the future looked so uncertain? And there was also the cultural shift. On Chinese social media, a new expression went viral, calling natural diamonds a IQ tax. The term, popularized on platforms like Weibo and Xiaohongshu, implied that only the naive would pay so much for a natural stone when nearly identical lab-grown alternatives existed. For a more practical, connected, and skeptical generation, spending a fortune on diamonds stopped making sense. Some opted for personalized gifts, others for technology, and increasingly, gold returned as the symbol of wealth and stability. This cultural shock created a dilemma. If Chinese consumers, the main engine of growth in the past decade, no longer fall for the sparkle of diamonds, who will sustain the future of the industry? And it is precisely in this vacuum that gold resurges, breaking records and challenging the crown of diamonds. But why are young people exchanging the symbol of eternal love for humanity's oldest metal? What if the real rival of diamonds was never in a laboratory, but in China's own ancient traditions? In recent years, as the diamond market collapsed, gold sales skyrocketed. The World Gold Council reported that Chinese demand for gold jewelry reached nearly 670 tons in 2023, a rise of more than 10% compared to the previous year. Amid economic crises and social uncertainties, gold once again became a safe haven. After all, in turbulent times, who would trust a diamond that loses 80% of its value in a matter of months? This shift was not only rational, but also symbolic. For Chinese culture, gold has always represented prosperity, luck, and stability. When young people began questioning whether a diamond could truly be considered an investment, gold emerged as both a practical and emotional answer. Imagine a couple about to marry in 2024. With job insecurity and falling household income, choosing gold instead of diamonds was not just more affordable, but smarter. Jewelry stopped being about ostentation and became a store of value. And here arises another fascinating micro-conflict. How can an industry that spent billions on global marketing to convince the world that diamonds are forever compete with a tradition thousands of years old that links gold to wealth and eternity? Young Chinese began seeing diamonds, whether natural or lab-grown, as disposable fashion items, while gold reclaimed its throne as a lasting good. Not coincidentally, gold prices hit record highs in 2024, surpassing $2,300 per ounce, according to Bloomberg. This cultural shift opened an even deeper wound in the diamond market. It was not only about fewer marriages or economic crisis, it was the symbolic meaning itself that was changing. And once a symbol breaks, how can the narrative be rebuilt? The industry now faces an existential dilemma. Continue pushing the sparkle of diamonds or adapt to a world where consumers no longer believe in the stone's eternity. But how did global industry giants like De Beers and Indian producers react to this storm? The diamond crisis struck not only consumers, it shook the foundations of the entire global industry. Companies that built fortunes for decades on the promise of eternal luxury were forced to rethink their strategies. De Beers, long considered the undisputed queen of the market, cut production by 20% in 2023 and announced steep price cuts to salvage sales, according to Bloomberg. Lab-grown manufacturers, once hailed as symbols of innovation, also collapsed. Some declared bankruptcy after seeing carat prices fall from $300 to only $80 in 2 years. The meltdown seemed unstoppable, and the ripple effect was brutal. In India, thousands of workers in Surat's cutting centers lost their jobs as orders evaporated. The city, responsible for cutting about 90% of the world's diamonds, fell into social collapse, with factories closing and families relying on credit to survive. In China, where production had expanded at breakneck speed, many factories drastically reduced output to avoid losses, halting the growth narrative that once charmed investors. The contrast is painful. For consumers, it has never been cheaper to buy a diamond. A lab-grown 2-carat diamond, which would once cost more than $20,000 if natural, could now be purchased for under $2,500, according to consultant Paul Zimnisky. But for producers, that same fall meant layoffs, bankruptcies, and despair. Affordable luxury for some became ruin for others. And this leads to a larger reflection. Will the diamond industry manage to reinvent itself? Or are we witnessing the start of a new normal, where diamonds are treated as disposable fashion items instead of investment goods? De Beers seems to be betting on this transition, marketing its Lightbox line at just $500 per carat, transforming the diamond into an everyday accessory rather than a symbol of eternity. The fate of diamonds has never been so uncertain. What was once synonymous with global status now faces competition from cultural traditions, economic crises, and even the very technological abundance that was supposed to strengthen it. Perhaps this is the real lesson. There is no eternal luxury, only narratives that last until consumers decide to change them. And when that happens, even the hardest stone in the world can shatter. Thank you for watching this documentary on Tellnomics. If you want more analysis on how culture, economics, and geopolitics are shaping our future, subscribe to the channel, leave a like, and share this video. The sparkle may fade, but knowledge remains.